Everybody, welcome to the morning market briefing Monday, May 23rd, 2022. Hope you're doing well. Hope you had a great weekend. We were just talking about kind of a weird trading day on Friday, a little bit of a rally late after it looked like we might just kind of bottom out. Futures looking pretty strong today. Ben, talk to us about kind of the afternoon on Friday.
Yeah, so Friday afternoon, it definitely seemed like there was a little bit of a trapdoor scenario, but the problem is everyone on Twitter kept talking about it being a trapdoor scenario. And when that happens, you generally don't see that.
It's not a trap when people know about it.
Right. And you had options expiration. And what happens in options expiration is you have one of two things happen. One thing happens is that you end up tailing, which means that a lot of options that were previously out of money come in the money, and you have investment banks that have to short in order to hedge those positions. Anyway, the point of that means that it self-perpetuates whatever the trend of the moment is, but that only happens after a certain threshold. If you don't reach that certain threshold, you'll probably peg a certain level, which means that you'll end up just kind of navigating and ending up about where you started. And that's basically what happened on Friday. Some people might look to it and say options expiration, don't look into it too much. The trend of the market is down, therefore we're going to sell off today. But sometimes I've seen a lot of these weird Friday moves, and I've seen a lot of these excuses made like options expiration, but it ends up being a little bit more meaningful than that. So I'm cautiously optimistic we might have a near-term bottom here on that Friday level, but still extremely early days, and we're only up about 1% pre-market.
Yeah, up about 1%, though I will say, based on what we saw the last couple of weeks, seeing some greens pretty good. Dow Futures up 1.1, S&P Futures up 1.1. Interesting to me that you still have the NASDAQ kind of lagging. That's been probably a relatively underrated portion of this period, is when we have had these updates, we haven't seen as much tech participation maybe as I would have expected. I don't know if you would agree with that, Ben.
I think that started to shift a little bit at the margin. You're starting to see a little bit more differentiation among those names, but I would agree with you. I think that there's still more downside here through the cycle. I think what was really interesting last week was that if you actually look at the stocks that were really driving most of the decline, it was a lot of the consumer focused stocks as well. And so that ends up feeding into technology, because a lot of those consumer facing stocks have to advertise, and a lot of these advertisers that they pay are these technology companies. And a lot of the people who they sell through are companies like Amazon. So when consumer gets hit, a lot of the technology gets hit too. So that kind of makes sense a little bit. But what's interesting is semiconductors have actually held up fairly well. If you look at analog devices, if you look at some of those other companies in the more industrial chip names, they're actually doing fairly well.
Staying kind of with the chip space, Broadcom nearing a deal by VMware. Expected that this could actually happen, could come soon. I feel like this is one of those stories that you almost expect not to happen, just given the political climate that we're in and some of the moving pieces. But I think the price is relatively right. It seems like this thing's going to go through.
Yeah, if they get the price right, it seems like they both want a deal. VMware spun out of Dell last year, so they haven't been a separate company for that long. Broadcom really wants to continue to grow. They started as a semiconductor company, but really want to move a little bit more into software. This would help them do that. Question is, does it get approved? Again, like you said, Andrew, I just think that the political climate is very anti-merger right now. And so even if they come to a deal, it's going to be it's going to be a process to get all the approvals, because you're probably going to need the US, and I imagine you're going to need the Chinese approval as well.
Interesting story here, Tom. Apple is looking to boost production outside of China. That may seem like an obvious line item to be pursuing at this moment. But this is actually something I tried to kind of get going in 2020, hit a bit of a snag with all the COVID impacts and the pandemic, all of that. Where are they going? What do they want to do?
So it looks like they're trying to move into Vietnam and India, which would diversify where they're actually doing their manufacturing, though we have seen troubles with companies like Nike, where Vietnam also had pretty strict lockdowns during the pandemic, which caused some supply chain disruptions. But I think, just given the way the world has moved, having to have that diversification of where you're producing things is important in order to make sure that you've got the product. And I think a lot of companies have run into this. Apple is not immune to it, despite being the biggest, baddest company on the planet. Well, I guess Saudi Aramco overtook them last week as the biggest, baddest company on the planet. But
certainly the baddest.
Definitely the baddest. I think it's a good move on their part. I think they just got to do it. I think more and more companies need to do this. And we saw a lot of that push during COVID. And, I don't know if there was a video that came out over the weekend that was a expat living in China who put up a video of his experiences during the Shanghai lockdowns. It was up for like an hour and then it went down. It was put up by the Wonton Don, who's a YouTuber who has been living in China or used to live in China for a really long time and would walk around showing you how weird living in China is if you're a random white guy from Boston. But it seems pretty grim. It seems exceptionally grim. And so I think moving away from China is a really good move at this point. It just seems like this lockdown stuff is pretty tough.
Man, I missed the Wonton Don video. I hate that.
Yeah. I mean, it was up for it was like, hey, here's a friend of mine I know from living in China. He's going to give like a 15-minute talk on what it's like to be living in lockdown. And within an hour, it was down and totally blocked from the internet. So that guy's probably dead if I had to guess, but pretty interesting stuff.
JP Morgan, meanwhile, is raising some of its guidance specifically on net interest income. The original projection was for 50 billion. They moved it to 53, now to 56. They've also got Investor Day today. Ben, what are you looking for thematically on Investor Day?
I just think camping out on the net interest income, that's a phenomenal move because they only reported earnings a month ago. And so to raise that by another 6% right now, I think is extremely good. Obviously, higher interest rates are helping that. But interest rates haven't really exploded a ton over the last month since they reported. They've gone up a bit, but they certainly went up a lot more in the first 4 months of the year. I think that what I'm looking for now from Jamie Dimon with JP Morgan, and then really there's a lot of executives talking at Davos. They're holding the Davos Summit this week, which is that annual gathering of these economic elites that usually takes place in January and it's now taking place in May. I expect some soothsaying from these guys. We're already starting to see some people come out and say that the economy, that the consumer is okay, that the consumer is holding up okay. And I'm interested to see how that progresses from here on, because depending on what company you talk to, they'll say different things about the consumer. I think it's pretty clear the consumer is slowing, but at least according to JP Morgan's guidance, they're seeing higher net interest income, which could also mean that people are taking out more loans.
Yeah, I think that one thing is that in the first quarter, the 30-year didn't move very much. And in the second quarter, it has, but I mean, it hasn't moved by leaps and bounds, but the amount of money that they're paying on deposits is still exceptionally low. They're only moving based on the federal funds rate. So if they only raised one time, that means they've only got to pay you about 0.25% on your deposits. Whereas, now the 30-year is up closer to 3%. It's wider spread than we've seen over the last couple of years, which is beneficial to them, but it's still not exceptionally wide. And if we see continued hiking and not a lot of pressure on the 30-year, then we'll probably see that reverse towards the end of the year would be, my guess.
Yeah, I think that's one thing. I've actually gotten a number of questions from clients about money market rates and what we're seeing. And there's been movement. I want to be clear. There's been movement. And if you look at it at the scale of what money markets have paid over the last several years, it'd be easy to extrapolate, wow, what a huge move this is, but they hadn't ticked up much.
Yeah. I mean, you're looking at I put it in the chat for our team the other day, just in case people had cash. And I think for the snacks, which is the Schwab one where you have to have $1 million or more in the money market, is only paying 0.7%, which is pretty low considering you got to commit $1 million in time to do it.
I got an advertisement from American Express for a high yield savings account that paid 0.6%.
Yeah, I mean, you can buy a treasury for that 1 month treasury and make probably closer to that.
Yeah,
without having to take any risk whatsoever.
Yeah, I think from JP Morgan's point of view, I think this is very much more of a loan growth story than interest spread story.
On the geopolitical front, we do have some comments from Biden on Taiwan, saying the U.S. would get involved militarily to defend Taiwan if China tries to take it by force. He made these comments during a tour of Asia and Japan. He stressed that the U.S. remains committed to the one China policy. This acknowledges, but doesn't necessarily endorse Beijing's claim that Taiwan is part of China. I mean, this is Such a nuanced story. I feel like if you're sitting at home trying to figure out how to digest all of this, how would you say this language is different than maybe how we talked about Ukraine as it related to Russia? I mean, both of them kind of seem like he's giving himself a lot of outs.
Biden was called out here because he was too vociferous in his opposition to China taking Taiwan by force. I actually think because it was in contrast to this policy, and already you're seeing this morning that a lot of the White House is walking back some of these comments. I do not actually know how different it is from the policy. I mean, I guess the nuances of international relations might be different, but basically the U.S.'s policy toward Taiwan is that it's part of China. They acknowledge that it's part of China. We're not supporting that, but it's part of it. Now, if China goes in with force into Taiwan, at that point, Biden says that we would respond with force. So that was apparently something that he bridged something that shouldn't have been bridged at that point. I don't know how incongruous that actually is with the actual policy, but at least the White House is walking it back this morning. So he may have overstepped the mark there.
It just seems so similar to we'd have to see how big the incursion was. I mean, the fact that he narrowed it into, by force may seem like we're stepping across the line in terms of policy, but it still leaves plenty of options.
Mm-hmm. This is very similar to when John Cena referred to Taiwan as a country and then had to publicly apologize.
Yep.
Because he had overstepped bounds, and we don't want to start a war because John Cena, doesn't know geography.
Yeah, it'd be a real shame if
John Cena and now Joe Biden.
It's tough. Meanwhile, in the supply chain, the White House is saying they're considering a diesel release from the Northeast Home Heating Oil Reserve in order to address diesel shortages. Continuing to see challenges there. Ben, with these reserves, I mean, it's always kind of one of those things. How much are they going to release? Does it actually have an impact?
The entire reserve consists of 1 million barrels of diesel, which is about a day's worth of supply for the region. So it wouldn't really do much. In later comments, they said, well, they do see signs that diesel is topping out. I don't know what signs those are because diesel keeps going up. And I know that's a big problem for a lot of the shippers right now.
Meanwhile, we now have the average age of cars on the road up to 12.2 years. That's a record high, fifth straight year. I mean, shout out to the car manufacturers. They're building vehicles that last longer. I don't know. I mean, it's one of those data points that shouldn't we be better at making vehicles that can last? I don't know that this is a bad thing.
I mean, this is a big one back in 2010, 2011, when we used to do the macro presentations for the bond desk that I was working for. The guy who ran them was obsessed with the average age of the car on the road, and that was his favorite economic indicator. And at the time, I was driving a 1991 Dodge Caravan, so I was way above average at that time. But I mean, it's an interesting thing. I think it's worth keeping note of. I mean, when things are good, people buy new cars. When things are bad, they don't. And the older this gets, I think the more of a read through it is for the economy, because people making decisions just to try and keep it patched together and keep it going.
I'm taking the over on that one. Mine is 18 years old.
Mine's 16.
Let's see, mine's 2011, so I'm right kind of on the dot.
Oh,
getting close.
Wow.
Younger than average, Tom.
No big deal.
But I mean, the average car age here is well over 12.
Yep. Yeah.
So, sure. I don't know. It works. The vehicle works. It drives. Week ahead, we've got Investor Day today with JP Morgan. We've got a little bit of earnings kind of trickling in, still kind of coming through on the retail side a little bit. FOMC meeting minutes on Wednesday. We'll get NVIDIA earnings Wednesday evening, which I think will be pretty interesting to see. I mean, that stock's been absolutely pummeled. What are you guys kind of paying attention to this week? What are the big headlines?
For me, it really starts on Wednesday with the FOMC meeting minutes. I'll let Tom talk a little bit more about that. And then Wednesday continues into the evening with NVIDIA earnings. That's going to be a really big one. Thursday, we're going to get the second look at first quarter GDP. This shouldn't really mean much, but if we do have a positive revision, especially on that net export number that turns the GDP positive, which could happen. I think it's unlikely, but it could happen. Given the net exports that we saw in Q1, then that could change the tenor of the market and maybe for the positive. And then in the evening, we have Costco earnings, which based on the retail earnings from last week, wouldn't seem so good, but Costco just runs a fundamentally different business than those other ones. So that'll be interesting to watch as well.
Yeah, definitely the Fed meeting minutes on Wednesday. I mean, they're going to be backward looking, but it would be interesting to see whatever read through you can get in terms of their thinking. I think a lot of things have changed since the meeting, and I'd be interested to see if they deviate at all, if there's any discussion of a triple rate hike. I just don't think there will be. I think they've basically set the expectation they're just going to do 2 a meeting going forward, but we'll see what it looks like. The GDP number to me, I kind of think, and I'm interested to hear you guys' thoughts on this, is that if we do have another negative GDP print and we technically are in a recession, I think the market actually rallies. So, there's a lot of talk about recession fears. Are we going to go into recession, et cetera, et cetera? But if the market's already down 20% and we're in a recession, I think at that point, people are like, well, it's done. It's happening. We can move on and not be like, oh man, are we going to have a recession? Because the answer is not only are we going to have one, but we've been in one for, call it 6 months now.
Yeah, I kind of think some of that uncertainty almost comes off the table. And it's a weird thing, but I mean, we talk so much about how the market hates uncertainty. The market would rather know that there's a bad outcome than not know what the outcome is if one of the potential outcomes is bad.
Yeah, I agree with that. I think that I think with one caveat, I would say we want to see growth's going to have to decline. That's what the Federal Reserve wants. So that's going to have to come. So whether or not we have if we call it a recession right now, or in 6 months or in 12 months or in 18 months, that's what the Fed wants. It wants to slow growth and thereby reduce inflation. But really the end goal right now is reducing inflation. So the faster that we can do that, the better. I heard Jim Cramer on Friday talking about he wanted an overnight, over the weekend, 100 basis point hike in interest rates. And he thinks the market would go up on that because it means the Fed is serious about inflation. And I don't know if I necessarily agree with the cause and effect there, but I definitely agree with the cause and effect of we need to solve inflation. And after that, we can get going with growing the economy again.
Last thing I'm looking for this week is a Sirius XM podcast deal. Conan O'Brien sold his podcast network for $150 million. I'll be honest, I didn't even know Conan O'Brien had a podcast.
I didn't either.
And I knew we had one, so why aren't we getting that call?
I mean, that's more money than Joe Rogan got from Spotify.
That's crazy.
And everybody has listened to at least one Joe Rogan podcast. I have not seen any evidence of a Conan O'Brien podcast.
Apparently, it ranked 26 among all podcasts by weekly listeners.
That's crazy.
That's wild.
Which is kind of surprising to me.
But I think we're just outside of the top 30, probably.
Yeah.
Though I think Conan is very popular with people who are like 3 or 4 years older than I am.
Yeah.
Like he was really hot, like for people who are a little bit older than me.
I think if you're early 40s, you're like Conan O'Brien.
Yeah.
What a guy.
He was super hot in the 90s, but I was a little too young, I think.
I think it's a smarter deal than signing Tom Brady for $375 million. So,
well,
for
he's no Peyton Manning, that's for sure.
Well, we'll wrap it up there. We'll debate Peyton versus Brady the rest of the week. We'll be back tomorrow at 8:30. Hope you guys have a great day. Talk to you soon.